India has improved its ranking on the 2015 Corruption Perception Index or CPI released by Transparency International. India ranked at 76 this year, a leg up from 2014's rank of 85. However, India's score remains unchanged at 38. An increase in public outrage against corruption could be attributed towards the improved ranking. Indian leaders, however, are falling short of their bold promises, adds this report. The Corruption Index measures the perceived level of public sector corruption across the globe. It is scored on a scale of 0 to 100, where higher the points, lower the corruption in the country. Now, the least corrupt country in the world is Denmark, followed by Finland at number 2 and Sweden. Let's talk about investments now. It also looks like ease of doing business is improving in the country. We had told you earlier that private equity investors pumped in over $5 billion into real estate in 2015. And now a survey on investors' expectations from the sector in 2016 has been released by JLL India and RICS. So what is the outlook looking like for 2016? Will there be more investments? More importantly, what can we retail investors and home buyers learn from the big boys? My colleague Rukmini Krishna tells us what investors are betting on. Take a look.
Well, the survey clearly indicates that the big boys are betting big on the Mumbai, Bengaluru and the Pune markets. And they will also be putting their money into office spaces, mid-income housing and offices built for ITES spaces this year. Now, talking about the survey, the investors do expect the sales to increase, with 66% of the investors anticipating an increase in sales. Moving on, refinancing will also continue to be a trend this year. Also, when we talk about exits, the investors do feel that, this year there will be more number of successful exits in comparison to last year, and that there will also be an increase when it comes to consolidation. Talking about equity investors right now, a majority, 71% of the investors feel that there will be more number of pure equity investments going ahead this year. Now, they're also expecting a lot of investments to come in from Asian, countries like Japan and China as well. And lastly, when they were asked about the affordable housing market and the government's ambitious Housing for All 2022 project, the investors have said that due to low profitability and a higher time to market, the affordable housing market at this point in time is, pretty much not viable as an investment. To conclude the report basically says that the investor sentiment has definitely changed and that 2016 is going to be much better in comparison to 2015 for the real estate sector.
Look, that positive outlook there for 2016. Earlier, we also caught up with Sunil Agrawal, the director at RICS, and asked him if we could expect an increase in funding from private equity firms this year. His take, whether investments would be skewed towards debt, and his key takeaways for retail investors. Listen in.
India still is an attractive destination because given the fact that China is down and so are, commodity prices, so is oil, Indian real estate for a long term can still be a good bet. So I would say if flows are not increased, they will at least be maintained at a similar level. But since 70% went to refinancing, I would just take it with a little bit of pinch of salt if the funding remains as robust. I think there is going to be a paradigm shift in 2016. And the reason for that paradigm shift is that a lot of debt heavy investors are realizing that it is becoming increasingly difficult for the promoter to service the debt. And you've seen a lot of litigations now in the court. So we are going to see debt heavy investors either trying to shorten the cycle of 3 years and will be very selective in debt lending. But the trend that I see in 2016 is that private equity is going to come back in a big way, because a lot of players who have entered the market are also very long-term players which have deep pockets. So we see that a lot of these players are going to go back to private equity, or they are going to continue in investing on stabilized assets like leased out office space. So you would see return of private equity in some sort of a manner in 2016. If you're a retail investor, stay away from suburban locations. A lot of people have invested into suburban locations, then they've seen that projects are either not delivered or they have taken a long time for price rises to happen, and they've been stuck. So there are prime assets today, which are not suburban, but they are, if not city-centric, somewhere in the middle fringe. Even if they are a little more expensive, reduce the size of your holding, but those assets are available cheap. At least if you are an investor in real estate, please invest in them. If you're a short-term investor in real estate, I would rather suggest that if you can find an exit and go back to mutual funds. I would really not suggest a short-term investor to be stay put in real estate, especially on the fringe areas.